You're watching EAC News. Thanks for joining us. Let's have a look at today's finance. The CSX Index is currently at 505.7 points, down 0.97 points or 0.19%. The daily exchange rate is 4,061 Khmer Rial to the USD. Now have a look at what's happening in finance around the world.
Asian equities continue to witness foreign outflows for the fifth consecutive month in May, hit by concerns over monetary tightening measures by the major central banks and supply chain distributions due to strict lockdowns in China. Overseas investors withdrew $3.69 billion out of Asian equities, data from stock exchanges in Taiwan, India, South Korea, the Philippines, Vietnam, Indonesia and Thailand showed. However, the overflows were the smallest in the last 5 months. Foreign offloaded Indian equities worth $5.18 billion, the biggest outmount since 2020 of March, amid concerns over the weakening rupee and the rising oil prices. Indian rupee hit a record low against the dollar and country's inflation levels also jumped to multi-year highs. Indonesian and Philippine equities also witnessed some outflows. However, Taiwan, Thailand and South Korea received inflows worth $819 million, $611 million and $168 million respectively. Some analysts said that regional equities are recently more resilient this time, despite aggressive selling by foreigners, as the central banks possesses strong foreign reserves and economics have better economic fundamentals. Alex Liu, strategist for TG Securities, expects limited downside to further equal outflows this year. Asia equities gained after quantitatively tightened in 2017, tracking the rise in US equities, SP 500, which likely supported equity inflows in 2017. The dollar wobbled towards its first steady week in 3 on Friday, and traders looked to the US jobs data for clues on how far the fast and Federal Reserve might raise interest rates. Markets have locked in a consecutive 50 basis points Fed hikes in June and July, but the dollar has been pushed around this week, but uncertainty about what happens after that. The dollar rose through an early part of the week on nerves of the record high inflation in Europe was a harbinger of a sharply higher rates everywhere, but it fell on Thursday and stocks rallied and mixed US economic data muddled the outlook. The dollar was nursing those losses on Friday and sat at 1.050 per euro flat for the week and 129.85 yen to gain about 2%. Asia trade was thinned by holidays in China and Hong Kong, and a holiday in Britain is likely to further lighten things while traders wait for the US employment data at 12:30 last night. Lower volume graduated a jump in offshore yen, which was up last about 0.3% at 6.6329 per dollar. Equity markets are pushing higher, said Chris Weston's head for the research of brokerage Predestone in Melbourne. I think the equal market, especially the house, of the dollar in the case of the car. The SP 500 index rose 1.8% on Thursday. The risk-sensitive Australian and New Zealand dollars each made a multi-week highs as the loss set the weekly gains, having broken resistance of 72 cents to the Aussie is gathering support ahead of the unexpected raise right next week. The dollar index was flat at 101.76 through the Asian session and is very marginally higher on the week, pausing a decline following the 2 consecutive week losses for more than 1%. The yen has kept under pressure by super low interest rates in Japan, a little chance of them following the rest of the world higher responsible for its weekly loss. Sterling held gains of $1.2569 in the cryptocurrencies. Bitcoin hovered around 30,000. That's all the latest news in finance. Tune in Monday for more.